And the total debt stock of Nigeria is likely to exceed 50 trillion naira as the Debt Management Office plans to borrow additional 6.39 trillion naira to finance the 2022 budget deficit. Meanwhile, the federal government has paid the total sum of 7.27 billion naira as installments on loans acquired from the World Bank and International Monetary Fund, and that was done in February this year. Well, we have to dissect that and related issues on Moshui Temitope, investment strategy analyst with AfriInvest Asset Management, joining us this morning. Hi, Temitope. Good morning.
Good morning. Thank you for having me.
Yeah, so once again, we are talking about the debt stock of Nigeria, and a lot of people, first, I mean, should we pair it against revenue? Should we pair it against GDP? Are we still on safe grounds from your perspective?
Okay, starting from the metrics of debt sustainability assessments, because your question is in the purview of DSA, debt sustainability assessment. So it measures the ability of government to take up more debt, and it's also a function of government revenue and economy size. But you and I know that you cannot pay debt with GDP. You pay debt with revenues, just like you own, and you want to say that your family members will pay your debt. You are paying with your income, because GDP is a combination of consumption, investment, government spending, and export. So you cannot, so most times when the government talk about the fact that debt to GDP ratio or debt service to GDP ratio is below the IMF threshold of 55%, and it's even below the fiscal sustainability act of about 40%, because it's currently below 40. And even in the next 5 years, it's expected to stay below 40%. But the concern has to do with revenue. We are talking about the fact that government is not even getting enough revenue. Lately, we've been mentioning how oil theft has affected Nigeria oil supply, and how, revenue has continued to remain depressed. So I think the attention should be drawn to debt service to revenue ratio, because investors are concerned about liquidity. In fact, if you want to invest in any company, what you look at is liquidity. Would this company be able to pay my debt immediately, my obligation immediately? And it's a function of if the company is liquid. Same with countries. You have to look at government ability to earn. The revenue is actually very important, because, debt are rolled over. So when a debt matures, government wants to roll it over. So that is also...
And here we're talking about the servicing, not the debt itself. So I guess that's also important to draw out.
Is extremely important. Is very, very important, because if you look at debt service, to revenue ratio from less than 50% in 2014, now we are looking at 85.5%, and the projection is that it will exceed 100% by 2025. And it's a function of several factors. Before now, we were talking about how increase in debt stock, has continued to contribute to debt service, because
and debt servicing, it takes away the liquidity for capital expenditure,
exactly,
which is what will drive more liquidity and development in the economy.
In fact, you're going too far. If you're looking at capital expenditure, government is even struggling now to cater to recurrent expenditure. So capital expenditure may not even be on the table, which is very essential for sustainable and inclusive growth. For instance, we are looking at over 90% of revenue that will go into debt servicing, and we are still talking about problems around infrastructure, because when you ask a manufacturer today what their problems are, they'll talk about infrastructure.
Power,
transport. If you talk to a farmer today, in addition to insecurity, they'll talk about transport, road, power. Even an average Nigeria, is a major bane on even MSME, because that what drives an economy is MSME, and their challenges include, infrastructure, electricity, and a number of others. So as you will continue to spend more on servicing debt, because it seems there's no light at the end of the tunnel, because if you look at what is happening globally, I'm sure you're aware that interest rates are rising.
Of course.
Which means interest expense to the government to increase. For instance, the last Eurobond issuance by the government is over 8%. Same issuance last year was just 7%. So if you even look at US interest rates, and it's currently at 10-year yield is about 2.5%. This was just less than 1.6% in 2021, less than 1%.
When you talk about Eurobond, it just reminds me that we're the first African country to access Eurobond this year. I don't see it. I know that, one of the observations from that was that, we were able to even increase our rates because we still have investors' confidence in the country's bond. But on the other hand, why do we even have to go out that early? you know, to get a Eurobond?
Because we, you know, the country is grappling with a lot of challenges that we didn't envisage last year. One of it is the fact that oil production is not even up to the quota of IMF. We are doing below 1.6. So that is a problem on its own. State government at some point may not be able to pay salary. So all of this, you know, government has to be aggressive in the Eurobond space. And again, you know, if you know that interest rates will rise, it's usually better for you to front load debt obligation. You know, government is able to do that
yeah,
at 8%.
That's true, because I know the US has warned that we're expecting more hikes.
You should expect more. In fact, in Nigeria, we're expecting increase in interest rate because if you look at the last MPC meeting, about 4 members suggested that rates should increase.
For a hike.
And in addition to that, a number of African countries, Egypt,
Ghana, South Africa.
So they've increased policy rates. So at some point, Nigeria will have to increase interest rate, and that's...
So you think the next MPC will see a hike?
We may see a hike at the next meeting or the following one, because of several factors. You know, the market has to be made competitive from the angle of seeing other African countries increasing rates. That's on the one hand. And again, if you look at inflation, though we may want to talk about the fact that inflation is from the angle of food and all that, there's also increase in money supply. For instance, look at the waste and means of the government. Last year alone, waste and means increased by 4 trillion naira, and you know, by the rule, it's expected to just account for 10% of previous year's revenue, which means government should not have gotten up to maybe 1 trillion, but we got 4 trillion. The money is in circulation. It's also contributing to, you know, inflation. So what I mean by increase in money supply affecting inflation is that naira is increasing above productivity. So when you have excess money circulation, it leads to what? If there's no increase in domestic productivity, you import more. It puts pressure on exchange rate, and exchange rate is a strong component of the CPI basket because there's imported food inflation, and even other components also depend on importation for survival.
Just yesterday, the MBS, 2 days ago, the MBS talked about the import bill for food. Exceeding the export, obviously, which is enormous in Nigeria.
Is actually very problematic. And I think it's even very important to address that now because of major shocks we have seen in recent times. Countries are now becoming, you know, they are looking at how to become self-sufficient. We all know that no country can assume to be totally self-sufficient. Even the United States, China cannot. But they are trying to ensure that in the short run, just 2-3 months or a year, they are able to provide for their citizens when there's a major shock. So I think it's even very important now than ever we begin to look at self-sufficiency in terms of food production. You can see what Ukraine-Russia crisis is doing to prices, especially with not even, let alone energy. We've seen series of shocks just within the last 5 years, 2016, 2018, that was a US-China trade pass. We also saw another one in 2020, that was global pandemic. We saw that, and just barely 2 years, we are facing another one, which means we should be prepared for...
And now the lawmakers are talking about fixing the price of diesel. I think that's also dangerous.
Actually, I understand the point they are coming from because of stable prices.
Yes.
Right. But they are talking about this because there are inefficiency in other sectors of the economy that could have mitigated the impact of increase in prices, you know, on welfare of people. If you want to fix prices, then, you know, it's going to cause another problem because they'll, you know, black market, all of that.
Exactly. We're still talking about how to get subsidy out of petrol. So if we start with diesel again, and the government is borrowing this much to even fund the budget, I mean, we had the projection of 3 trillion naira for subsidy, which we now know that most likely is not going to cover subsidy for the year.
Yes. So,
you know, and government is still going to borrow for that. We're talking about 80-something% of debt servicing, not debt, to revenue. I mean, this leaves us in like a circle that seems it has no end.
There's no better time than now for Nigeria to embark on a serious reform, because when you go by major macroeconomic data indicators, it's showing that we are heading for a dire condition. For instance, you've just mentioned about debt service. Last year was just 85%. As I've told you, we are projecting over 100% in the next 3 years. Why? Because even the projection did not even factor in the current oil theft that has continued to affect revenue. So if you're able to factor that into the equation, you are looking at way above that 100% may be overly optimistic. So I think it will continue to challenge the government in terms of sustainable and inclusive growth, because if we don't devote so much to capital projects, manufacturing sector, industrial sector will not, will not be efficient. And when you talk about poverty, poverty is a function of employment.
Yes.
If people are employed, they'll be able to feed themselves and family. Because
even insecurity we're talking about, I mean, one way or the other is connected to unemployment and poverty.
It's actually connected to it, because an average person anywhere in the world loves self-esteem. Nobody can come out today to say that I'm a bandit. Nobody will want to come out to say I'm a terrorist. So in a society where optimal employment is ensured, look at the United States and a number of other countries. Unemployment is 3.5%. In fact, 6% is below that is closer to the lowest unemployment level in 50 years. It's just 0.1% to get to that level of 50-year low. So if you are able to create decent job, I think it will be able to address some of these problems of insecurity.
So now, how do we reverse this circle? I know